This video chart presentation of Response Genetics Inc. It's a NASDAQ listed stock, trading our ticker RGDX. Response suffered a pretty decent fallback here in November, from up over top of $2, all the way down to slip to $1.09. Real nice bounce to start the year, back up to $1.73, trying to make higher lows. But the stock has found some pretty formidable resistance right here at $1.50. One time there at the end of February, ran up to $1.58 in intraday trading, pulled right back down. Again, tested it on Monday. And Tuesday got knocked back downward, closing down 3.5%. But I think still at this point, it's sitting on a support level. And it's a chart worth keeping an eye on to see if it's going to take another run at this $1.50 or if it's going to crash through this support level. I can see the MACD did make a real nice climb as it was finding a bottom back towards zero. Tapering back off though, at a pretty neutral point in trend right around zero. But as long as it can hold that mark, that's what we look for the chart trying to maintain a bullish look coming off of this base in December. The histogram bars are moving back towards zero. So the MACD is just kind of at a make or break point right now. And one more reason to pay attention to this chart. ADX is down very low, trending around 10. That's a point we always talk about, looking forward to start to gather some steam, move to higher values, and add some strength to a direction. Now it doesn't tell you which direction, of course, but typically the ADX doesn't like to trend at these low levels. We'll start to see it climb as the chart works to pick a direction. Again, very neutral look to the MFIs, all three components right there at 50, saying the price is just trading near average prices. It's a nice look to the accumulation distribution, going along with the price per share, is holding an uptrend of making some higher lows. You can see from the spike, it's actually a little bit lower, kind of a wedge pattern. I still read that more as an optimistic sign as it's climbing up. There's just not some heavy selling pressure in there. Chaikin money flow, holding in the green. Tells me at over 20 period increments, buying pressure is outweighing selling pressure. Not getting much from the CCI with the down day yesterday. You can see it bounced right off of zero. It's actually still in bear chart territory. Below zero means the stock price is below its 20-day mean. And there's not much life in the momentum as gauged by the full stow, all the way down near 20. You don't really see bullishness in momentum until the full stow is holding above 50. And the tricks, like the MACD, it's a gauge of trend, falling right back down to that zero mark. Again, that's where we look for it to try and hold, stay in positive territory, roll back upward, and show that the trend is going back bullish. See the RSIs tried to spike upward with the move on Monday. Selling pressure on Tuesday sucked the momentum right back out of the play, and they turned sharply back downward. So definitely getting a little bit of mixed signals from the indicators. Overall, pretty neutral, and that should be somewhat expected. As I mentioned, the price per share is making higher lows coming off the bottom, but struggling to make higher highs, and with a definitive resistance point right there at $1.50. That's going to be a key spot for me. I think if it breaks through that and closes above that level, especially with an increase in volume, the odds are pretty decent that it's going to come back up here and challenge these old highs, which happen to coincide with this red line, the 200-day moving average, which is right now at $1.69. So should some upward pressure come in and it break through this resistance, I'd look for that spot to be a pretty difficult spot for the chart as well. But if it does break through that, then you're talking about higher highs and a more definitive upward channel being established since the lows of $1.09. On the support side of things, I think it's pretty important for the chart to hold right in the area that it is, sitting right on the 50-day moving average, which is at $1.41. And there's also some static support right through that area as well, even going back 8-9 months. You can see the support point at the ending part of 2013. That was serving as resistance, trying to hold it as support so far in 2014. So it's pretty important that it holds this area, because if it does fall through that, separates further from the 50-day moving average, I think the odds are really increased. It's going to come back down here to at least $1.20 and perhaps even challenge these old lows. Volume's not bad in this. It's actually picked up in 2014. Looks like there's been some buying interest that's come in with the drop-off in share value. I'd like to see a nice strong volume bar if this chart's going to break through this resistance to get the momentum and trend really cranking in a much more bullish fashion to try and take a stronger run at the resistance up around $1.70. So those are the type of things that I'll be looking for in the RGDX chart. But as always, merely my interpretation. Thank you for watching. Trade smart.